Morning traders, welcome to the Traders Lab. I'm your host, Tom B. Appreciate you stopping by today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. This stream's about integrating Bookmap order flow tools with auction market theory using the volume profile in the intraday developing time frame. This stream's about the business of trading, and you're all welcome to the TraderLab community. Can I please get a sound check, screen check in YouTube? Had a little feedback going here. Thank you, Marty. How are we doing in YouTube? Good morning, everybody. Thanks for visiting TraderLab today. Make sure we're doing okay here. How are we doing in YouTube? Is YouTube percolating? Okay, Billy, thank you, everybody. Okay, here we go. Is the screen doing all right? You can see it? Okay, great. Thank you, everybody. Well, this is the TraderLab, and the TraderLab is about the business of trading. There's no cost for TraderLab currently, and it is open to everyone. The idea of the TraderLab is to help you understand the reality of the business, not what you think it is, not all the influencers and all whatever out there, trader wannabes. It's just, what is this? And what are the typical impediments that keep us from sustaining ourselves in the business? These are the things I like to bring. And also, I've been trading going on 47 years, I guess, at this point, both professionally and out here with you. And everything you've done, I've done, except I've done it longer, which means I've wasted more time than you, probably. I started in 1980. And when I say waste time, what I'm really referring to is taking random winners and trying to improve it. It's a logical approach. But the thing about randomness is everybody can have a winning trade. And we think that we just have to improve it. Logical. But this is not a let's make it better business. This is a random environment with a random distribution of outcomes. So the way to work in randomness is not to create certainty, but to solve for randomness. That might be something a little different than what you believe or what your objectives are. This is what the TraderLab is built on. It's about understanding the business you're attempting to be in, not what you hope it'll be or what you think it is. That might be useful. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. By the way, grab a pen and paper. I'm going to give you some interesting input. Also, you should definitely review this stream and review yesterday and the day before. Everything is laid out in advance, and even though the market is random, this is about building plans, anticipating behavior, and of course, putting on risk, taking stops, and hopefully, over time, extract dollars more to your side of the ledger than to the other side. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. This is for educational purposes only. If we get into real time, we'll talk. Don't forget, for the month of February, if you can send in your trades. You just need to execute them on Bookmap, on chart, or on the dome. Show your trades, annotate them. It doesn't matter if they're on replay, if you trade in sim or you trade live. Just show them, send them in. You can win the blue jacket. It's very cool. So don't miss out on that. And if you're in TraderLab, you're already doing this. If you're following the learning process, send them in. Don't miss out. Okay, let's move forward. Now, we're going to run fast. So what I always suggest you do is you review these streams, stop them at interesting places. If you do screenshots, build a binder of trades. You need to reinforce this and create unconscious competence. And it's real time, it's real plays, it's static screenshots. This is all part of your education. I have 3 bookshelves and a number of trees that fell over the years of, and I mean binders, I don't mean the skitty ones, of research and tons of things that got thrown out that look promising. This is what it takes in this business. But in TraderLab, I've distilled this down to learnable chunks. You can leverage off my 47 years. And again, it's not to replicate what I do. It's to learn. And once you learn and you can vet and you can learn this actual business model and become consistent and learn to manage your emotional states, which is based on a business model. You can't trade, in my opinion, without understanding the business and knowing where you should trade and where you shouldn't. If you're just playing a video game, you're going to have dopamine, you're going to have a great time, you're going to have random winners, and you're going to go out of business, most likely. I'll leave it at that. So let's go into the higher time frame. The reason I do this stream is I have sympathy for developing traders. You wouldn't want to go through what I did. Nobody should. I'm going to show you something. It almost looks magical. This is an advanced trading methodology that I share here. Now, the thing about advanced, that doesn't mean complicated. We kind of confuse advanced with complex. This is not complex. This is actually kind of simple. What is difficult is a vertical integration of time frames. That is where you can have a bull market and yet you can be short, and intraday you can be trading rotations inside. So the market can be up in a higher time frame, it can be short in an intermediate time frame, and intraday you can be long or short or just trading from a dominant side. Doesn't that sound conflicted? Well, a trade plan is conditional. So you have to define the condition of the market and then attempt to align in the time frame or the rotations that you trade. That is what is complex because it's moving parts vertically integrated. Think of it like a vertical chess game. That's how I used to visualize this thing. And what the auction is, which is what this is about, and I'm going to show you, is participant behavior. It's shopping. So forget about all this complexity and voodoo. All right, throw it away, please. And your indicators may be the problem, not the solution, because they all work randomly. Remember, you have a software toolbox. What does it have? 150, 200 indicators? The big question for you and this astute group of traders is, why do you need that many? Why are there that many? Is it because they all create edge, or because they all have random winners but there is no edge? So you mix them, you match them, you create random inputs in a random environment, and there's an old saying from when computers started, garbage in, garbage out. Just a personal opinion. Okay, I'm taking you someplace where they say most people have no idea. I'm going to share it with you. This, if I can remember, now I'm trying to show you yesterday, which is here, and the high of yesterday was, 80, call it about 81 or something, rough. Write that down. Just do it. You'll see why. Yesterday's high. And then we did the Acapulco cliff dive. Now, why was this the high of the day? Why was I looking to short? All this is posted in the TraderLab before the RTH open, and you can come to TraderLab, you can see this. Now, the thing I want to stress is nobody's right. There is no right or wrong in trading. The way you measure right and wrong, if we're going to use that description, is following your plan. Not predicting, not knowing, following your plan. And if you don't have a plan, then you're just gambling, and that's entertainment. And I always say, go to the casinos, get the cocktails and the ticket to the buffet. When I go to casino, which I don't do much, but I go with my friends, it's entertainment. That's entertainment. It's a video game. Great. Just know what that is. That's not sustainable, but it's going to be a great time. If you want sustainability, you got to approach this differently. You have to do what 90% of the failing traders, you have to do what they're not doing. And that's what this is right here. So this yesterday was the ETH. Now this is the day before yesterday's ETH. Let me show you how this works. This line is the highest volume in this day, previous day to yesterday. So this was called, and think shopping. Oh, it's on sale. I'm not paying that. Get out of here. Retail price. All right. Now in the ETH, we come up here and we test up. Notice now shopping, this is the retail price from day before yesterday. This is setting up yesterday. That's why I want to go over it. And notice what happens. Fair price, and we're checking it from below or wherever. And the volume, you see this gray? Now these are called TPOs. That's just time. Don't worry about it. The volume dries up. So what you have is buyers, but less. You see how it curves? This is how the profile works. It's like less buyers. This is like the price got too high and less buyers were willing to pay it. Well, if I run out of buyers, what's going to happen? I may find exhaustion and then a counter rotation. So it does this. Now write this number down, 6905, right there. That's the highest volume in this. This is an auction. It's called a distribution, and it just rotates. But here's the secret sauce, if there is such a thing. In this consolidation, if you will, or rotation, 05 is the highest volume. It's the same as that, except now it's over here. And what it is saying in the language in the market, this is language. I don't use indicators. I use measurements. I do not use indicators. They're a problem for me, not a solution, because of conflict, ambiguity, and if I have conflict and thrashing mentally, I cannot trade. It triggers fear, right? 47 years, I'm still respond to emotional states. I want to minimize my conflict. So this is high volume. That was high volume. If the buying dries up here, that price is too high. Now I do this. My high volume is 05, new retail price. And I break away from it. Write this down. 69, I think it is, or 80. I can't see the chart. Eyeballs are falling out of my head. Hold on. 6880-ish, low volume. Why is this important? Now, this is all prior to yesterday's open. You're going to see why. And you write these numbers down. Very important. This is where we rejected all of this volume and we started a new auction or distribution. So you have 80-ish and you have 05. Now, let's come to yesterday. What is the high of the day? 81.50. That was a short in yesterday's stream. And then we did the Acapulco cliff dive. Now, remember 05. Okay? Is everybody with me so far? It's very important. All of this is before yesterday's open. And this is all posted in TraderLab. And again, I'm as clueless as everybody else. But I'm not ignorant. I use the term clueless because it takes me out of the need to be right or prediction mode. I know I don't know. Isn't it better to know you don't know than thinking you actually do know? Because that creates myopia. Now, this is before yesterday. Let's go take a look at what the language was. Remember, ETH high on this day was here, 67. I'm not paying that. High volume in an intermediate time frame. We open here. We do the Acapulco cliff dive. We come down here. We find our buyers short cover. Looks to me like we're going north. Not so much. Then this day, we open outside. Total surprise to me. Gee whiz, trading. How about that? Now what? By the way, this day coming down, our targets were 70, if you remember, and 61 was extended. Who knew? So now when we open under here, then the targets become 26, 6802, and 6790. Okay? Now I'm going to take you to yesterday. Maybe. Target. And this. So the target was 02. These are all posted in TraderLab, and this is called the naked volume point of control. What does it mean? Oh, it's on sale. What happens? Remember how this works. Market goes up to go down. Market goes down to go up. Market goes up, and we don't know when, but we know that there's longs in here. There's sell stops here, sell stops there, sell stops there, sell stops there, sell stops there, sell stops here. But what do we know about this? This is an intermediate high volume area. Too low. This is where this whole thing started. Well, if I come down here, and no clue, by the way, and I don't get under here, which was an intermediate time frame high volume area. Remember the auction. Oh, it's on sale in the big box store. Where do we do? North. What do we do to the shorts? Abuse. It's called the Squeezeteria. Is everybody following? So now what, you say? That's what I want to know. What? Here's what. If I open higher, now I have the squeeze. What does that do for me? If you're sitting short, what are you going to do? Exit stage left, buy, cover, and what are we going to do in the TraderLab? We're going to get aligned with the buyers who are buy stops and initiators to squeeze. So where might my targets be? Where was the retail price that we fell away from over here? 69.23. That's our target. And what about the rest of this? Let's see how it plays out. And don't forget the 69.05. Is everybody with me? Very important. Why do I do this? Because this is what trading is. This is plan. This is understanding. And this is how you create edge and how you can potentially create sustainability and differentiate your outcome from over 90% of the other people who think they are traders. Not the way it works. Again, my opinion only. I'm sure there's always others who do this just fine. So let's look. Let's go to Bookmap now. Is everybody with me? Hope you're getting something from this. If you have questions in YouTube, the chat, I'm not on my streaming computer. That kind of, as you guys know, I was in Costa Rica for 2 months and it went to the happy hunting ground. I have to get another computer. But in the meantime, I'm here with you. Now, I had some trouble this morning with data, so there's going to be some holes in the data for a little while, but I can show you auction. I cannot show you order flow for the early part, but I'm going to show you auction market theory and structured trades. But it's going to be somewhat missing some pieces initially. Now we know the condition of the market. Let's grab our context grid sheet that I've shared in TraderLab. By the way, in TraderLab, not only is it a community of serious traders just like you, and it doesn't matter how long you've been trading, what you've been doing. You know what matters? That you're interested in succeeding. And that if you realize what you're doing now is not working because you're waking up in the same place with Trader Groundhog Day, then you might want to consider something different. So let's look. Yesterday's high, okay? Remember the short, the 80 was the level. This was where we shorted yesterday, not the high of the day, but right in this area. And we wrote, that was and the target below, if you remember, was, I think, just going to say, this is, I just got to bring this back just for a second. The target below from the 80 was this outside edge. And then this was also possible. But this was, you know, when we were up here, there. And it got there and then it had a bounce. And then eventually later in the session, we got to the next target. Life in the fast lane. Now, back again. Don't forget the 69.05. Now, what do we know? We're opening out of value, higher in range, outside of value. Above the 45, key level. Go back to the top of the stream so you can understand why this is important. So if I open here, let's go to our grid sheet. What does it mean? I'm opening in range, out of value. The market is out of balance. What do we anticipate? An overlapping or a normal variation day. What does that mean? Normal variation means extension and rotation, not trend, but directional. Okay? So if the market's out of balance, then we can anticipate two-sided trade, but we know the market's short. This is what you got to learn. If the market is short, how does the market work? Market goes up to go down on the fuel, the stops. Remember, there's traders always on both sides. And then it goes down, traps the shorts. What then? If I don't get new sellers and I hit my targets, what's possible? Possible. Squeezeteria. What do you do in a Squeezeteria? You participate. When the market went down, what was happening? Flush of the financial, you know what? The longs are getting thrown under the bus. We ride the elevator down. Then when the shorts are in there, we ride the elevator up. That's called alignment. That's what the auction is. So what do we anticipate? Overlapping, but the market is short. So are we breaking out of yesterday's range? Yes. What do? Trade in the direction of the breakout, but normal variation day, which is market profilage, means rotational day. So here we are. Now statistics. We're opening higher inside of yesterday's range. Now you got to vet everything for yourself. I'm going over this stuff. This is just how I trade. Not saying it's any good. It does seem to work. So we're opening higher inside of yesterday's range, but outside of value. That's values where 70% of the probability took place. Also, 45, I got to come back here. 45, whoop. I think I just lost my mind. Is it 68.45? It's got to be. Hold on. Losing my mind is part of the process. Sorry. Ah. 45 is a key number. We opened above it. 68. Hope I have the right thing going on here. Getting a little suspicious of these levels. Anyway, RTH open. Yesterday's value area high. And this is high volume and intermediate time frame. Okay? So RTH open. What am I looking for? Longs. Why? The market is short. What is it telling me? Too low. Now, what do I want to do? Here's a little more information. Overnight volume point of control. What's that? The retail price or highest volume from the last auction. What is this? The ETH high. What else? What's my yesterday's high? We have over 80% probability taking out yesterday's high or low. I don't know about you. I'm going to lean this direction. Also, what else? What's that key number? 69.05, right? And then what's the naked volume point of control, the next target above? There, 22. They're all on the price map before the market opens. I'm showing you the targets. Now, let's see how we trade. Is everybody tracking? Give me a yes, give me a no, say, I don't know. You can learn this. I mean, if you want to. Now, here's the other thing. You're going to have to go through a learning curve. You're going to have to undo things that don't work, that you believe work. I had to do it. It was hard for me. I built trading systems, and this is all indicator-based and hybrid indicators that I built. And I'm not talking about hanging out for a few months. We're talking years. And I was a trend follower. It was a different problem. But because when I was managing funds, there was day trading wasn't part of it. You know, you pick up the phone, you call your guy on the floor, you do your thing. There was none of this rocking and rolling. We didn't have computers. There were no PCs, and there was no internet. There was no electronic trading initially, you know. So, I mean, there was something called Project A, which was before Globex, and that was only in the bonds. That was the experiment, CBOT. Anyway, neither here nor there. So I was there, right? I was through the beginning of all this stuff, and technical indicators really came into the realm with Wells Wilder back in 1978. I started in 1980, so, and you guys know I shared an office with George Lane. He created stochastics. So I thought oscillators, were the holy grail. So RTH open. This is absorption. No clue. This is called developing volume point of control. It resets at RTH open. My data might be off here a little bit because I had some lag, which required me to do a restart. That's why you're not going to see everything that I would like to show you initially until I got the restart going. So right here, this is buyers, this is absorption. Now there's sellers in there too. Why doesn't the market go down? Because there's buyers here. This is right at the RTH open. Who knows? Now this is the fair price. I come down. Now I already know I'm outside of value. I know I can buy against this. So I'm looking for longs. I also know this is the retail price in the last auction, the ETH. So if I come outside and this is too low, this is an area for me to get long. Okay, I'm just telling you. So for me, longs. Where? Clueless, but not ignorant. Watch. I break high. There's more sellers. And what happened up here? There were sellers there, sellers, buyers here, more sellers, sellers, buyers here. There they are. Sellers there, sellers here, sellers there, sellers there. This is resistance. Sellers going to zero. Where are my buyers? Watch. Sellers are here, and that's absorption. Goes down. Buyers are here. This is delta. I'm just showing you delta. Sellers. Why? Absorption. It goes down. Seller is there. Buyer is here. Break high. Now my buyers are in control. Where were my sellers? They were there. This is a long. Well, this might not be your thing. This is a long. Stop has to be under here because why? The buyers were there and the buyers are there. Let's watch the behavior. This is a long. This is a TraderLab long. This is a long. This is a long. This is a long. This is not a long. This is the change. Now I know that I have aggressors. And the other part that shows you the aggression is the range of this rotation. Okay? So the rotations are showing me there's an aggressor. Who are the buyers? Who are the buyers? The shorts. And us, if you're in TraderLab. Or some of us. VPOC migration. Another long in the TraderLab. Now, here we go. Now what do you do, Tom? Let's watch. VPOC migration. This is another long opportunity, but you have to be conscious that we have stops in here trailing and that it could easily pick. So I don't run my stops like here. Every retail trader on the planet is going to put their stop here because it's a swing. Well, what does the market do? What's this delta? Sell stops. And what happens here? Chances are there's absorption here because when the sellers are here, that's inventory that can be absorbed. If I break above the VPOC, I can take a long in a directional market. And what else? This is the first statistic. I forgot to give you statistics. I'm slipping up here. We opened higher inside of yesterday's range. Let's look at statistics. There's a 97% probability to get to the ETH high. Okay? And you have to vet these. There's an 82% probability to take out the previous high or low. I don't know about you. I'm going here. What do you think? Checking the overnight volume point of control, which was right there, 82% probability. It's the retail price. What else? Well, previous value area high, this is where I was looking for a long, right? Didn't get there. Life in the fast lane, guys. Okay? And then I have my target up above, which you wrote down, which I think is 69.05. So I am going initially for 69.05, and I will be taking continuation trades and whatever else falls out. So VPOC migration, VPOC migration. What do I see here? This is an inventory grab. Now, I wish I had the heat map on here so I could show you the interaction with the order flow, which I cannot at the moment, but I will. And this is a technical problem I had, not with Bookmap, but with my data. Watch. This is support. Let's go back to the shopping analogy. The yellow line is high volume. So in the intraday developing time frame, which is what we trade as day traders, in alignment with higher time frame, see kind of how this all comes together. Hold on. This is support. So I have support here, here, here. I'm going to also put this one on here. So I have my outside edge. So, and it's yesterday's high. I'm outside a range, which means I'm only taking longs unless I'm a counter-trend trader. Now, something I repeat until I can't think anymore is developing traders need to master one side. Because if you cannot be profitable with the dominant side, you're on your way out. I firmly believe that because I've trained a fair number of traders over the years, fair number, when I ran a desk, and this was what was required. And if somebody couldn't do it because of FOMO, because they wanted to trade versus learn to trade, they didn't stay in the business. They were asked to vacate. Because it's like if you can't have the discipline to learn how to trade, how are you going to learn to trade? So that's kind of like in TraderLab, I repeat this, because when traders cannot control their impulse, they don't have discipline. Discipline starts from day one when you walk in the business. You don't know how important it is. And the choices you make are not conscious. They're wired and they're primal. Survival, bring the food back to the cave, FOMO, that's what it is. Support. This is a reversion trade. It's called the VHVN trade. I made all these up. It's a long to there for a scale, and then you're looking for 05. If it gets there, who knows? Watch. This set up a counter rotation. And I think, I don't know where 9 a.m. is, but we have Michigan pre. That's a big report. This is the target right here. So this was my target initially for my longs. And you know where it came from, right? Is everybody with me? Oh, you signed up for Bookmap? Well, congratulations. You have no idea what kind of edge you can develop. That's all I can say if you haven't used an order flow tool. Now, here, the order flow's back in. Let me show you how you might use this. This is resistance. This is a sweep. A sweep suggests counter rotation. Resistance. Now, I'm not at my target, so I'm sitting here and my teeth chatter. Why not? Resistance. Break high. Liquidity and a strike price, 6,900. You could anticipate, and it's sitting there. This is the edge we can get. I know it's there, and I get the sweep. When I get the sweep, and this is a trigger. Now, let me explain a trigger. A trigger suggests a potential rotation, but if you short this, it is a counter trend trade. Because what is the trend? I'm outside of yesterday's range. In my book, it's longs only unless I have an edge as a counter trend trader. Just saying. Two different things. How do you use this? Now, with your vetted plan, the thing about a vetted trade plan, so you understand, we're not making it up here. If you have to say, what should I do now? You're just gambling and you have no consistency. You can't measure it. You're just playing the video game. The answers lie in your plan. You already know what you'll do. You don't know what the market will do. Remember, the market's 100% random. Do you want to be random? That's not a solution. That's a problem. So this suggests counter rotation. My trade plan, or yours, says the following. Where does this fail? Where is my stop? My stop might be here, or my stop might be out here. My stop might be under here. Your stop might be here. Right? Do you know where to put it? You got to have the answer before you put the trade on. If you don't have the answer, you're making it up. That's a problem, in my opinion, at least from what I've observed. Notice the liquidity comes back here. What does that mean? It means sellers are here, sellers are there, sellers are there, sellers are there, sellers are there, sweep, and this, so we have our sweep, don't ask me why, not my job, resistance, break high, sweep, suggests counter rotation. This is a support, break above it. Notice where my next liquidity is. It's at my target. And that was an exit for me. And all this is posted pre-market at TraderLab. Now, I have to stress to you, I have no clue. No clue. You see? Why did I target this? I showed you at the top of the stream. There's no magic in this. What this is understanding how the market works, why it does what it does, where it might have behavior, and anticipating it. I'm already out in front of the market before it gets to a location. I have no, now here's the other part of this. I don't know if the market will go there. I don't know how the market will go there. I don't know when the market will go there. So I know nothing as far as the randomness of these rotations. I do know what might happen. So that was my target. Now, is everybody with me so far? Are you getting something out of this? How are we doing in YouTube? Did you pass out yet? So what's our target? Remember, the next target is there, right on the price map before the market opens. This is the TraderLab. You can learn this. Now, the other part about this is you need to, if you understand trading, which you probably don't, it's not your fault, you would also understand why the market does this. And the rest of it, of course, the other caveats is no clue whether it will or won't or anything else. Remember, 100% random 100% of the time. So if I understand that component, then I'm going to look at statistics and probabilities, and I'm going to try to operate with this edge and take stops like the rest of us. By the way, what is a stop? Overhead and costs of production. How do you experience a stop? Right or wrong? FOMO. I got to make it back. Self-esteem. You know, how smart you are. How about, has nothing to do with any of that. That's all earthly behavior. So this was my target, okay? Now, at 9, we had 9 o'clock was Michigan UOM, big report, very important. 9 a.m. I believe it was 9, right? You're awake? Good. Okay, so now we come down to the mid. What else do I know? This is support. This is support right here. Variable high volume node, yesterday's high. It's not unusual to come back into yesterday's range. This is my outside edge or low volume node of what's called a distribution of volume. So what we did, let's look at the story. We did this little, what do you think of this, Tom? Too low. Leave it. What about this one? Too high, too low, retail. High volume. These are microstructures. The high volume for the day developing time frame is the same as this, except this is lower time frame as you think, except there's no time. Order flow is not regulated by the clock. Okay, so when you guys think of 5 minute, 15, 30, hey, whatever you want to do, knock yourself out. There's no time here. So it's what does it take for the participants to check an area and then vote on it. If you go to the store, think of this like a mini mart, and there's a high price they're not paying, and there's a price on sale in your mini mart, and there's a retail price, the volume, and then everybody goes, you know what? The sellers now are not willing to sell it there anymore, and they raise the price, and they check this price. And this price is too low as it's developing, and then we run away, then we have this low volume area. Now it's possible if we fall out of this and get back in the range, we can come back down and do anything. But I know my outside edge is here. So I'm sticking to it. So as long as I'm above this area in the overnight high, and if I test in here, I'm still good for the longs. Okay? Now the next piece, this is a change in condition. It is now this is where multiple time frames can get confusing. Okay, remember this is like Matryoshka dolls, a vertical integration of time frames. So in the intermediate time frame at the moment, I want to trade long. In the intraday developing time frame, this thing, I want to trade long. But it goes from long to rotational trade. This is called mean reversion. Now I have a different condition inside of higher, you see, with target up here, right? So I'm going to trade from the long side. Now let me give you another statistic. You like this, and you got to vet these. Remember, we opened higher in range. There's a 98% probability I take out either the first hour's high or low. Given that I have a target up here, which is the same thing as this, except it's left behind. Remember, what's this thing worth? I don't know. Let's figure it out. This has over 98% probability. And if I go into rotational trade, I now have an uptrend, short squeeze. And if I rotate, who am I taking out? The longs, who are trailing. So if the longs internally in the intraday developing time frame get whacked, then I want to use outside in trading mean reversion for continuation longs. Is this making sense? Why? 98% probability to take out either the first hour's high or low. There's the first hour's low. If I was a betting man, which I guess I am, I'm going for the north side. I'm out of range. And I got this. So let me ask you, which way do you want to trade? Okay, now, so if I'm trailing, I have, and I post this in TraderLab, and again, I'm not brilliant, I'm just like you, clueless. So if I have a target there, and I don't know anything, I'm, other than I want to get long, this is a trade management opportunity for me. And it was a target for me. So this can be an exit or nothing. This is trade plan. And I have a sweep. Let's look at the reversal. And again, this is like real estate, guys. Location, location, location. What's sitting here? This. Location. What happens? Sweep. What does this suggest? Maybe counter rotation. Sweep. The other side. What does this suggest? Potential up rotation. Liquidity. Sellers. What happens here? Sellers, where's my support? It's right here. Buyers are here. There's absorption. What's sitting up here? My sellers. Sellers. Where's my buyers? There. Well, look to the right. This is now microstructure. This is how I trigger if I was going to take a counter trend trade. But let's assume I don't do that. Let's assume that when I get this trigger, I'm using it. Well, it's an exit for me, but that's besides the point. Let's say I'm sitting here and I just, hanging out. Once I break here and here and in the microstructure, remember what I showed you at the low? Retail, too low. We're out of here. Too high, too low, retail. Sorry, Charlie. Off we go. Look at the opposite behavior here. Too high, volume dries up. Too low, oh, it's on sale. That's where the buyers are. I'm not paying that. Yeah, but it's a great deal. High volume, retail price. Break away from it. See you later. Thanks for playing. Have a great life. We're out of here. Trade management opportunity. Subject to your plan. Location, location. Now what? The longs are the fuel. Remember how this works at all time frame. Market goes up to go down. Market goes down to go up. Where it's down. Good luck with that. So now what? Where's my locations? Outside. Where's my variable high volume node? That was important to me. Out here. Where was my buyers? Over here. This was the last long, if you weren't long from, any of these. So I know there's buyers here. So I got support sitting here. I know that. So that's why it's labeled, and it's yesterday's high. Often what happens in these things is we check into yesterday's high. So if I get the counter rotation, now the context has changed to rotational trade. This is called mean reversion. Now I'm going to say something to you that's going to make your head kind of turn around. This is like from The Exorcist. Just don't throw up. And here's what I'm going to give you. If there ever was a holy grail, and there isn't, this would be it. Listen carefully. This is the same as that, which is the same as that, which is the same as that, all in different time frames and different structure. The nature of the market is to always come back and check a price. It happens in multiple time frames, the vertical integration. That's why I could target this, because it was an auction that took place yesterday that was rejected. Why are we coming back here? It was rejected. And why did we go the low of yesterday? Where did it go? This target, yesterday's low, same thing. Does that make sense? You can take this, you can put it together, but you have to understand what you're looking at, and more important, why. So now this has changed. I'm in an uptrend, but now I'm no longer in the bullet train. I've now reached a place, a target, and a structure in the mini market, the high volume, in this time frame is too high. And there's the result. So it's either trade management opportunity. Thanks for playing, Tom. We'll send you a coupon to the buffet. But what else do I know? I got a 98% probability to take this out and go there. No percentage probability. It's just market mechanics. So if I come outside, all I can do, if I want to be aligned with the dominant side and stick to my probabilities, is long continuation trades. Now, if you're a counter trend trader, knock yourself out. You could take a short here. Me? No. Why would I bother with that? Structured trade. VWAP to VPOC and mid. And where are we? Where were my buyers? Weren't they there? There? Retail price? Variable high volume node? Testing of yesterday's range? Is this a long? Yes. By the way, this is full session VWAP and mid. This is the regular VWAP. No good. Too close. Long, alignment, scale, going for this. Let's see what it does. And this is resistance. You'd be scaled, you get taken out. Watch. Now, I come down. This is my outside edge. Look, remember, outside edge. It's here. So I can, if I'm in a two-sided trade, remember, the context has changed. I'm now taking what's called mean reversion trades. That's outside in trades. This is the mean. So the idea of this is what's on sale. This is like, I'm not paying that. Well, where's the sale? There, you can see the buyers, retail. If this is too high still, I'm going to come out. What is sitting here? Liquidity. Watch. I took out this swing. There's stops here. Notice you always have to look left. This is my outside edge of the distribution, and it could do anything. No clue. Remember where I am. Remember I'm above the ETH high. Remember this is key, and there's my liquidity. This now is an area to observe. I have my sellers, and most sellers are sell stops. Who knows? Watch. Order flow trigger. Watch. So right here, this is here. I have Bookmap. I already know it's resting here. It can do the following. It could hit here, and this is a trigger. The long entry is there. The scale is there, and we're going for a 98% probability. Okay, or here, right? Same trade as this. Nothing has changed. It's part of the thrill. Look at the same thing here. Absorption at the mid. Break high is the trigger. The volume is in here. Scale, helmet, who knows? Take out the stops here. Liquidity here. Absorption, no clue. Going to zero. Break high, that's the trigger. Support is where the sellers were, which is right there. That's a long entry with a stop under here. You have to vet this. Scale is there. Mean reversion. Underline the term mean. Watch. Where do we come? So what would happen if you took this, you'd scale, you get taken out. You take this, you scale, you get taken out. You know, and I look at this kind of stuff and I'm going, you know, now emotionally, I'm going to feel frustration. Where's my level? I come back to the same thing. What do I know here? I got buyers here. Who are these guys? They're still in the book. What does that mean? Remember, language. We are integrating language. I know this is the outside edge. I know, wherever that open went, that we had aggressive buyers. And look at this. Nobody will. I'm out of here, right? So I know there's stops there. There's stops here. I don't know anything else. I don't know what it'll do. Remember, I know what it might do. I know where it might do it. I'm clueless, but not ignorant. The buyers are here. So this now is support. I get under here. Now here's the thinking. Tell me what you think of this. If the buyers thought this was a deal, you go to the store, you're in the supermarket. You go, oh, it's on sale. That's the retail price. And I get a counter rotation. Who knows? And it comes down here. The weak retail traders have their stops right here. That's retail trader behavior. Let me tell you this. Think of this. Why would you put your stop there? Think of this. Why would you put your stop there? You don't even know why. Because you're risk adverse. That's Hyde. Hyde's the lunatic who's going to protect you from the bus. It doesn't know that in trading that you have to not do what other retail traders do. You have to learn what they do and not do it. So if I know there's stops piled up here and there were buyers here, if I come down here, I can take the stops out. And here's the beauty of this. If you went to the store and your tuna was 75 cents a can and tuna is $1 up here, you'd throw a few in the cart if you're a tuna person, right? If it comes back on sale and all this market is doing is taking the weak hands out and the buyers that were here are still here, what's going to happen? Mean reversion. I already know that. If you're in TraderLab, you know it. You'd also learn in TraderLab you don't put your stop there. And you would put it there because you're risk adverse. But what I have found is my fear of loss is not the reason to do something in this business. I automatically do it because I'm wired to do it. But is it possible those impulses are not aligned with the business. And you're responding to something you don't understand. And that's primal wiring. You're making choices with no consciousness of what's under the hood. The chemicals that you've grown up with that have protected you in a foreign, and this is a foreign environment, but you're bringing that primal wiring here. The primal wiring says, I don't want to lose. Let me put it here. I'm going to save a tick. Yeah. Meanwhile, back at the trade, you'd be taken out, and this is not where your stop goes. It has to be further away, and you have to vet this. So if you're still long, you're back here. If you can add your business, not mine. What happens here? Break high. Well, look what I run into. Sellers. There's sellers. They're absorbing the buyers. That creates my counter rotation. And where do I come back? Let's come back. Let's look where my buyers were here. There's the liquidity. It's like a catcher. Oh, you're going to give me some more? I'll buy some more. Sellers are here. So buyers are here. Buyers are here. Buyers are here. You can see them. So now I come back. The buyers are still here. What's over here? Buyers, Tom. What's this? A trigger. What's this? An entry. Now, whether or not you take this trade, that's your business. You have to know where to trade. What is it? Where to hold them, where to fold them, and where you're trying to go. Well, there, but what do we know? Sellers are here. Wouldn't you potentially use this order flow? Because you see the sellers are in the book. And of course, you got these guys, which is at my what? My target, which was 05. Still material. Scale could be here. And then 98% probability and the target above. Let's just see how it goes. And we're trading mean reversion. Let's not forget. Rotational trade. %, target. Now, here's the possibilities. I narrated this in TraderLab. This is very important. Now, we have another trade in TraderLab called the IBF. I made these trades up years ago after a lot of brain damage, as you can imagine, and I've shared some of them in TraderLab. And the idea, most retail traders think, give me a lot of setups, and that's all FOMO based. I want more. And you're thinking the P&L. Gee, if I trade more, I'm going to make more. How about you trade more, you lose more? Have you ever thought about that? Maybe trade less and make more. There's a concept for this astute group of traders. How do you make more? You align with a higher time frame and trade larger rotations. Countertrend trading is not where you start. When I've taught traders, and I've said this many times, the countertrend trades are trade management opportunities. You have to learn to manage your trade and align with the dominant side before you get cute. Because when I got cute, I would take a countertrend trade, maybe make, if it worked, and make, 4 or 5 points. And meanwhile, there's a 15, 20 point move in alignment. And not only did I make nothing really for the risk, I'd still get stopped out, and I didn't really have good opportunity. Instead, the counter trend was an exit, and then use the counter rotation to get repositioned for the continuation trades. So when I posted this in TraderLab, I said, this is a trade management opportunity unless you have an edge as a counter trend trader. This is a short, or as a counter trend trade, or trade management. Here's the trade. This is called the IB failure. It is, now remember the condition of the market. This comes back to context. The higher time frame is up. We're going for this. Why would you take a short? Well, put it this way. Here's the exit. Let's look at it this way. Resting, notice let's go back here. What do I got? Resistance, my micro high volume. This is resistance. This is what set up the counter rotation. Remember, I get above it, and I got this waiting for me. This is like the Berlin Wall. And I don't know what'll happen. Remember, clueless. except we're in a reversion mode in an uptrend. That means if you're trading rotations, and I want to specify this is a specific condition in a condition. Remember, Matrushka dolls, vertical integration of time frames. This could be a short counter-trend trade, and if you're taking it and you're not profitable trading in alignment, you're on your way out. You disagree, it's okay. I'm going to put my 47 years of experience against yours, and we'll leave it at that. This is a sweep. This is location. There's my sellers. There's my icebergs absorbing this delta. So what you have here is buy stops, 475. Here's something cute. I'm going to give you a little something kind of like the bonus round. Let me show you this. What is this? This is the stop and iceberg detector. Why is this useful? Why do I care? The market goes up on what? Stops. The shorts, God bless them, we need them, who took the ride down and they don't understand reversion trading, become the buyers. Where are their stops going to be? Above the IB, right? Above here. I know that, you know it. If I know it and I'm in a reversion rotational mode, then I can come back to the mean and rotate under to take those and come back and continue, or not, right? This sets up the following. Exit, and this is what you should learn, or counter trend trade, which you should not take until you can be profitable and consistent, manage your emotions with the trend. So let's watch. And this is posted in TraderLab. I don't call trades. Believe me, I don't know what's going on. And where do we come? Resting liquidity. Where do we come? Yesterday's high. Waiting in the trough. And what else is over here? Follow the yellow brick road, my friends. You can learn this. What do I know? Buyers are here. This was a trigger. This is an entry. Where do our buyers show up again? Notice the liquidity. Notice the absorption. No clue. Sellers are here. Sellers are there. Buyers are here. Don't know. Sellers are here. Going to zero, Lewis. Buyers are here. I forgot what sorry. I'm trying to run ahead here, and I have too many things rolling in my brain. Here, I got to show you this. 476 buy stops. Oh, the humanity. Where are I? Because of the shorts. Counter trend traders. Thanks for playing. They get a coupon to the buffet. Sweep suggests counter rotation. 476 stops. Watch. 500 disaggregates. So location, sweep says counter rotation, potential, 514 stops. Thanks for playing. We appreciate you taking the short side. We need you. High absorption. Who are the buyers? Buy stops, less stop divergence. One, where are my buyers? Who were my buyers? The shorts. Break under the buyers, last place the buyers were. This is your exit. If you're long and you're using this for trade management, it sets up a return to the mean reversion. Then what we need to do is get back for the what? Target here. See how this might work? Where's the long? There. Where'd it come from? There. Where's the liquidity? There. It's got to break above it. It doesn't. It breaks low. Next layer of liquidity. Buyers, right? Buyers, long, stop under here or stop under there. Where are you trying to go? There. Scale. And then there. Where does it come back? Here. Why would it come back? We have a structured trade in the TraderLab. Really? Yes. So that's a long. This is a scale. Up to you. It's high volume. Remember, this is generic. How does the market work? Pricing. Break high. Back out of the IB. Now, subject to your plan, this is support. I'm getting more advanced on you. I don't mean to do that because you're noticing how I'm mixing all these time frames. You don't need to do this. You shouldn't do it until you can start reading it in broad stroke. Let's look at this trade. This is my area. Notice the liquidity. Notice the sweep, no break into this liquidity. I'm above the IB. This is my target, and I got liquidity front running. Subject to your plan, you could be out here, back in the Barca Lounger, or I get a sweep here, now look how the sweeps work. Suggest counter rotation. Sweep suggests rotation. Obstacle. All right, let's just look. IB, low volume, outside edge. What is this? We have, and what's that? So I got 5. I've got this as support. I got this. This is called the IB continuation trade. The short was the IBF. There's the setup for the counter trend, that for long to there, and then, up here. This is a counter rotation. I have a long here, back to there for the scale, here for the target. And what's my next target? If I get through here, I got 45. Let's go back to where this comes from, and I'll look at your questions. If you have them, appreciate it. Now, let's look at the levels. 44.75, 69.23. There was another one in here someplace. I thought we had, okay, yeah, 45, which is what? Higher time frame, high volume area, intermediate time frame. If I clear 45, I'm back to 67. Also, where are the stops? Above here. So it's fuel. So shorts in here are being abused, of course. And as long as I'm outside of this, I got this fair price from here. If this now, and this you could be done. You could be back in the Barca Lounger. If I get through here, and there's no saying where we're going to go, not blessed with that, this. Because this is a return to balance. This was a return to this balance. It's all happening in multiple time frames as you think of them. Is everybody with me? Let me look and see if you have questions. Why is the double top 9:42? Is this Central Time? Not a trigger? It could be. I mean, if you took a trade here at 9:42 with the liquidity, yeah, you could, you take a stop. If I took this trade, which, it's not on my list of trade, it's the IB. It's not my trade. That's all I can tell you. It's not my trade. This here, don't forget, I got this too. This is my trade. Now, let's just say I took the trade. Look, I take trades, I take stops. If I put this trade on, my stop would be above here, and I would take a stop, and I would have some choice words, and I'd put it right back on here because I take stops. I don't, nobody's immune. And then I just get back in the sync with it. I can't, it's a double top. The other part about a double top, by the way, that's a weak structure. If I see a double top, in fact, I didn't even notice this. I don't short a double top. Double tops are exhaustive. I don't trade double tops because this is a double top. Why wouldn't it take it out? That's just an exhaustive structure. And I've got the stat. You see, that's the other thing. At 9:30, I have over a 98% probability. I'm not fading anything in a market that the trend is up. If I took this, because I got a double top there, I'd take a stop, But I have a double top here. I can't take it. I could take this. And do I have a trigger? Let's see if I got a trigger here. Buyers are here. Sellers are here. I got buyers here. I get below the buyers. If I sell this, my stop's going to be here. If I get taken out, I get taken out. I don't know, I take stops, so I don't think too much about it. I can't. I have to move on. I have to just flush it right out of my mind. And then I would take this again. Now it's an IBF. This is resistance. And remember, we can poke. And then if these buyers exhaust, and I'm starting to show you divergence, buy stops are here. It's only 6. So I'm making maybe by a tick a higher high with less buyers. I have 1 stop here. This is exhaustion. This is the trigger. So short in here, stop above the liquidity. So if I was taking any of these shorts, my stop has to be out here. And I'd probably get picked off, Happens. Anyway, I hope that answers your question. I don't trade double tops. To me, they're a bad place because what they represent. I know early on when I started trading, real early, it was like, oh, a double top, you got to sell that. No. Yeah. Somebody says double top and you believe it. You got to vet everything for yourself. I didn't understand that early on. So, in fact, the first thing I learned, not that it's important, was in 1980, I took a classical bar charting course at the CME. We didn't have candles. They didn't exist yet. They didn't come around until, 87 or 80. I don't remember, but somewhere in there. So it was open, high, low, closed bars. So anyway, this is your long. And then this is the primary target. Now, you could be done. So for me, I don't have any shorts. It's just Barca Lounger. Next target is this. 45 and then 67. So these are my targets, okay? And this is another high. This is where the fuel is. So if I got buy stops, there's a reasonable chance, and I say reasonable, that's all it is, that we go there. Yeah, by the way, Steph, as far as whether or not you would take it, if you do take it, you take a stop. I don't know. It's not the end of the world. It's just annoying, That's how I experience it. Annoyance. Yeah. But when I take a stop, I take them every day. To me, I don't look at a stop as being right or wrong. I look at a stop. First of all, I look at my plan. And if I'm following my plan, I'm supposed to take the stop because I'm extracting an edge and I accept that I have no control over the outcome because I'm executing a plan that has an edge. The problem with trading edge is it's not a right or wrong or a knowing or any of this. It's a random, you have to remember this and write it down. It's not right, wrong. It's random distribution of outcomes where the probability of you extracting dollars using that process and that trade over time favors you. And you can have runs of winners, runs of losers, and I'm always going to say to myself, and I'm saying it's something different. Well, no, it's not. It's just random. So when I put a trade on, I'm following a plan and I accept. In fact, mentally, I put myself, and I think I posted this morning in TraderLab, I already accept I had taken a stop when I put a trade on. I mean, obviously, I'm rooting for the team not to take a stop. How could I not have that emotional attachment of hope? But my hope has nothing to do with the random outcome. So I can hope all I want, but at the end of the day, it's not the outcome of any trade. It's that I follow my plan, because that's what keeps me in business and keeps me profitable, not the individual trade. Developing or novice traders are all about winning and losing, being right, making it back. They're completely fixated on P&L. I'm fixated on plan. I'm not concerned about my P&L. I'm annoyed about paying bills, right? Aren't you? Well, I'm in a business where I have to pay overhead and cost of production. Before I start trading for the day, I recenter myself to the business I'm in, and I'm not on planet Earth. I'm in an alien environment with different rules. I have to recenter myself to preempting my emotional attachment to outcomes, preempting my fear, because it's wired. Is there a saber-toothed tiger behind a rock? How am I supposed to know what's going to happen here? I can't. If I can't know, then I'm triggered with fear. If I'm hesitant because of fear and the need to be right and not being eaten by the saber-toothed tiger, which my primal wiring and the chemicals being released in my brain to protect me, which is operational all the time, I'm going to look for certainty. When I look for certainty, I'm going to enter the trade over here. All I've done in a random environment is increase my risk, but I haven't changed the probability of the outcome. Does that make sense? Does that make sense? So I have no better probability of what is perceived by the lunatic as certainty. And now the FOMO kicks in because you don't want to miss it. That FOMO is about survival. Not taking the trade is about survival, avoiding the threat that may or may not be there, the apex predator. The FOMO is about bringing the food back to the cave so you don't perish this winter. And now you're certain, but you're not. That's the chemicals. I hope this is making sense. The biggest obstacle to sustainability, besides not doing the work and being methodical and developing discipline from the first day you come to TraderLab, is not understanding yourself and the elements, the things that are operational in your head that cause you to make choices that don't work in this environment. So you have to suspend those things and learn about them. That's the biggest obstacle. You're going to think, no, that's not it. Yeah, it is. Just think of what you do. In fact, what helped me with it, and I was talking about this yesterday, was Greeny, one of our participants in TraderLab, created, and I did this for myself, I don't know, 28 years ago. I built something in Excel called error cost calculator. It was a nightmare. I used to journal, did this, FOMO, skipped the trade, moved the stop, bailed out, all of it, right? And I journal it. Now, I'm not going to do that next time. I keep doing it, And I journal it. Okay, you're supposed to journal. Okay, I'm going to make a big red mark, circle, look at my journal, then go ahead. So I had a journal of errors, but I never really did much about it other than determined conscious decision not to do it again and still doing it because of the primal wiring. So this error cost calculator, I started then journaling in the error cost calculator. Skip trades, bailing out, moving stops, all of it. And also what preceded it. 3 stops in a row, now I got to make it back, P&L, all of it. And then I plugged it into the error cost calculator to start adding it up. As I never looked at it in total, I looked at it individually. Well, $10,000, $20,000 a month was basically being donated to the traders on the other side. I was giving it away. I wrote a check out, and a big one, like you used to have big paper checks, not the little ones, a big one, and put it on my monitor, 20,000. And over 6 months, I don't want to give you a number. So that did it for me because I quantified it. And I said, look at this. Those are profits. Those are dollars that were in my account that I willingly gave away because of the lunatic that is controlling my behavior. I choose to be in control. I choose to be responsible. I will not let fear and greed rule me. I'm going to fight. I'm going to do whatever it takes. I'm going to hold myself accountable. I'm going to create motivational and rewards for me, and I'm going to create consequences for myself when I don't do what I'm supposed to do. I'm going to keep track of my errors. I'm going to reduce my errors. I'm going to improve every day. I'm going to hold myself accountable. I'm the CEO of my business. Nobody else is going to rescue me from myself except me. That's what I decided. Because the choice was go out of business, be a break-even or smallly profitable trader, because I'd be giving it back. I'd get euphoric, all the emotions. I'd lose sight of that the next trade is unique. I'd think, look, I'm way ahead. I'd start tightening up my rotations. I'd think, and everything. So all of this stuff that happens to you happened to me. And I didn't understand. I didn't understand. I thought I was so good. Well, I am pretty good, but the emotions would derail, and then I'd be off my plan, you see. I'd be saying, I don't need it. I already know what I'm doing, right. Well, I do know what I'm doing. But when I went off plan, what happened was I now compressed my time frame. My risk stayed constant. And then I would start trading both sides. And here's the problem with that. Some days I made a ton, but over time, the errors would start compounding and I'd be losing control. And I wasn't really aware of the consequence. So anyway, long story short, I don't do that. Now, I still make some errors, but I got to tell you, they're few and far between. And when I make an error, there goes the pint of ice cream or the pizza. That's all I can tell you. And I'm very motivated by my pizza and my ice cream. So there you go. But what did it do? Those dollars are now in my account. Better place for them, don't you think? You know what? It is an alien environment. And you're not, we're not conscious of our behavior and the stimulants. That's why the hardest part of this is the psychology. And it is the biggest obstacle. I believe anyone who comes to TraderLab can learn how to trade. Absolutely. Now, it's my personal opinion. And it doesn't mean anyone who comes to TraderLab or any other education is ever going to be successful in the business. Because believe it or not, you got to do the work. And everybody wants to push the button for the dopamine. I get it. Hope you do. But that'll take you out of the business. The work is methodical process building, proof of concept, learning one structured trade. I know you're going to go, why only one? I can't make any money. If that just ran through your head, you have a problem. You see? That's hide. I need to get the goodies in the cave so I don't starve. The reality of education is building it. You want to play in the NBA, you want to be a surgeon, you want to be at the top of your game, you don't start at the top of the game. You start in a process of training and education and building one piece at a time, proof of concept. You need to understand how the market works. You need to build it. And you need to let go of the beliefs you have that are not in alignment. And here's the catch-22. And I coined a phrase for myself, and I've tried everything. Behavior modification. I mean, snapping a rubber band on my wrist. It hurt to try to get the thoughts out of my mind. I was thinking of upgrading to a cattle prod. You know, it works with a dog. Why wouldn't it work with me? Didn't work. So the error cost calculator ultimately was kind of what really helped me, because I was trying to change my behavior and I didn't understand it. I really didn't. I actually had to study this I think it's limbic system, you know, this autopilot, and that it's an evolution. It evolved for survival of the species, okay? And it's really works really well, except that it's a problem in the environment. So if you land on Mars or the moon, you're not on Earth. The gravity is different. You're not breathing the air. There is none. You see what I'm saying? You have a whole different way of operating. Why is this any different? It isn't. This is what I do in TraderLab. My goal is that you have the opportunity to actually create a career path. And I think I can help you with it. But it's going to require you to let go of your beliefs. I found myself in Trader Groundhog Day. I would have winning trades all the time. Now, remember what I said about the 200 indicators in your trading toolbox. Why do you think there's 200? Do you know if you had a random buy-sell generator, you don't know if it's going to buy or sell, you still have winning trades, and you're still going to have winning trades? What does that tell you about randomness? If you can have winning trades with a random buy-sell generator, then that's what Trader Groundhog Day is all about. You always will have winning trades. Gamblers have winning hands, but the house extracts the money and the dollars from the gamblers over a random distribution of outcomes. This is what the trading business is. We want to sit on the house side of the table following a plan. Remember, you only have control up until the point where you push the button. After that, it's random, and it's the statistical distribution or random distribution of probabilities, not predictability. That's why when I put a trade on, I've already donated to the Floor Traders Retirement Fund with my stop, because I have no idea what the outcome is. So mentally, I've already paid the price of entry. Then either I get paid or get risk neutral or whatever, and use my trade management and my time frame and the rest of it, and I get paid, or I take a stop and I go to the next trade. What else is there to do? Next target, by the way. So this is the TraderLab. I hope you got something from today. Please give a like if you're visiting in YouTube. I hope, my objective and the reason TraderLab exists is that you don't have to wake up and trade a Groundhog Day. It's going to require you to change what you believe trading is. It's going to require you to do something that is alien to you, but it's not complicated. Here's the thing. It's simple, but it's vertical. The complexity, if you want to say that, is vertical integration of time frames. I am trading multiple time frames here. This is in the daily time frame. This is an intermediate time frame. 45. Where's that 45, Tom? Why do you care about 45? I don't know. Where is 45? Where's that 45, Tom? Isn't that interesting? Where's the fuel above 45, this high? You think these guys are thrilled? The shorts that have their stops here? And then where's the next target if we get there? It's not a recommendation. 67. What are we doing in all time frames? Going back to high volume. Oh, it's on sale. Sorry, Charlie. Then what? Shorts. What happens to them? Abuse. Where do we go from there? There. What happens if we get above here? Higher time frame. Potentially there. What happens to these guys? I'm not taking this thing home over the weekend. There, or not. Please give a like. Hope you got something out of this. Appreciate you visiting the TraderLab today. Don't forget there's the contest going on for the blue jacket. You don't want to miss that. Just submit your annotations. You have to show that you enter exit on Bookmap, how you use it. Annotate, show us what a good trader you are, and we all want to grow and get better together. Don't forget to give a like if you're in Discord. Thanks for being part of the TraderLab community. Participate. You get more out of it. If you're in YouTube, use the link in the bottom of YouTube to visit the TraderLab community. There's no cost. It's available to you. If you're interested in the business of trading, TraderLab's for you. Don't forget to give the like on the way out. Review these streams. Go back, watch this one, and watch the 2 previous days. It is a lesson in high-tier trader methodology. And if you're interested in that, in building a business, you might want to invest your time before you invest a dime in your account. Just a thought. Take care, everybody, and thanks again for visiting the lab today. See you on Monday.